This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, it's Rob Reinhold.
Nice to be here. This is Rob Reinhold with Maverick Trading and Maverick Currencies. I've been the head trading there for, a very long time, 25 years.
And we are bringing an episode to you that I'm surprised we haven't done before. Maybe we've touched on it a little bit, but it really deserves its own episode. And that is, and I'm sure people saw the title and like, ooh, gosh, yeah, I have fallen victim to this many times. And that's going to be hesitation. I think even the most aggressive-minded traders have struggled with this in the past and may still struggle with this. So let's go ahead and get things kicked off, Rob. And this is an outline you put together. So go ahead and get things started. And as always, I will jump in where appropriate.
Thanks, Patrick. I think the episode where we talked about this the most was in the episode on undertrading. And we really talked about undertrading, why it happens, and we really talked about hesitation. And so let's get into what hesitation is, because I want to make sure it's very clear, because I don't want anyone taking what is a natural, normal process and making it bad, because we need to think through things. There are some things where you should hesitate, and it's a good thing. And so we want to make sure that we're not taking the good things you're doing in trading and throwing those away. We want to make sure it's the bad thing. So again, let's talk about, a good hesitation. A good hesitation is you're going to cross a busy street, you stop, and we've all been taught you look to the right, you look to the left, and then you look back to the right before you cross. Okay, so that is a great hesitation. So the big question is, what is harmful hesitation? And we went through this in a different podcast episode than this, and we really boiled it down to one sentence. When you chicken out. When you chicken out. When you've gone through the pre-flight checklist, you've checked off all the things, you've gone to that street, you've looked to the right, you've looked to the left, you've looked back to the right, and it's clear, if you've chicken out at that moment, that's hesitation. And that's what this episode is about, is why do we do that as human beings, and what in the world can we do to actually make it better? There are going to be two reasons why you might hesitate. Now, one is a reason that everyone is going to experience in their life, and that is pain. Hesitation comes from pain. Now, let me give you an example when you were a kid and your mom, dad, grandma, whoever told you, don't touch that, it's hot, and you ended up touching it. And that hurt, and that gave you pain, and that gave you a mark. Now, the mark on your finger went away very quick, but the mark in your brain was permanent. It was permanent there. That mark was there to tell you, okay, next time you're around that stove, you better hesitate before touching it. Now, again, it's a very good human reaction. It's one of the reasons why we've survived as a species, is that we learn from things that give us pain. When we go out into the market, the very first time you were trading, you clicked that button the very first time, you were excited. You're probably a little bit nervous, a little bit unsure, but the one thing you didn't have was pain. You had never experienced the pain of a loss, especially the pain of a loss of a trade that was going your way and then worked against you. You had never experienced that before. So you were blissful, you were having a great time. Yes, you were nervous, you were shaking, whatever, but you weren't feeling the horror of that pain. Once you experience that pain, that loss, you are getting marks in your brain. And those marks are building up and building up and building up. So what happens is, when you come to a similar situation of a trade you had 3 months ago that you don't remember, but guess who does remember? That's right, your brain. Your brain remembers, and so it's a very similar situation. You're going to remember that pain, and it's going to cause you to say, hey, you need to hesitate here, because last time you didn't hesitate and you felt pain. This, every trader experiences, every trader is going to have to deal with this. It's the pain, and the pain causes the hesitation.
Yeah, and this is one of the things that really takes people away from trading their system. And it's that trauma. like you said, something they remember in the past that really killed them. And they think, well, okay, I have this system that I've back tested or I've used, or I know it works and it's telling me to do something, but I still don't want to feel this emotion I felt before. And I don't want my account to take the hit that it took before when this very similar thing just happened. Now, this sounds super basic to a lot of people, but you would be amazed to how many experienced traders experience this exact same phenomenon. So I think there's a deeper reason of why this is. And sometimes I don't think experience really wipes this slate clean. So Rob, you have some you have some deeper thoughts on this as to who this affects and why it affects us the way it does.
Yes, I do. And you are right. The pain never goes away. It lessens, and we're going to talk about that. But look, this is something all traders will experience and all traders have to get over. And we're going to talk about how to get over it, just the pain and the trauma of past losses. The other thing I really wanted to talk about in this podcast is that some people are predisposed to be hesitant more than others. Let's get into that. Because I think a lot of your listeners, Patrick, are going to identify with some of these things because it is literally who you are. It is in your DNA. Hopefully everyone has gone to trader personality tests, taken a free trading personality test, where we give you basically your Myers-Briggs based personality test for trading. There's going to be 2 letters that I'm going to be talking about here. Now, the first letter is whether you're an introvert or extrovert. Yes, extroverts tend to take more action. Introverts tend to take less action. But I don't really want to focus on that. I want to focus on the next one, where you're either an N or an S. N is for intuitive, S is for sensor. Now, those don't really make any sense, so let me explain what they are. Intuitive people are people that they don't need to know the nuts and bolts. They just need to look at the big picture. They just need to know how everything kind of works. They don't need to know how it exactly works. So when that person, when that N, I'm an N, when my car breaks, I'm like, oh man, my car broke. Like, oh, what do? I take it in, I get it fixed. It doesn't really bother me, that failure. An S, a sensor. These are people that need to know how all the nuts and bolts work. And these are people that typically end up in engineering, mathematics, some profession where everything is basically guaranteed. If you are an electrical engineer and you hook up a light switch to a light bulb and you flip that switch and it doesn't turn on, there is a mistake. And your job as an engineer is to go in and fix that mistake. And if you fix that mistake, that light will always turn on. It will always turn on. That personality, when they go out into the markets, whether it's Forex, currencies, futures, stocks, I don't care where you go, all of that breaks down. There is no guarantee. You could have the literally best trade setup you've ever had, and it might be your worst trade you'll ever make. That really, really hurts sensors. That really destroys them because, wait, in this world that I'm living in this world of trading, I could do everything right and I won't get the right result. It blows their mind. And so in their world, they hesitate. Imagine if they had to go into the world of electrical engineering and sometimes it worked, sometimes it didn't. They would hesitate. They would hesitate in that world. So it's really difficult for them to deal with that. But let's take someone who is like a musician let's take a musician. Let's say someone writes a song. They want to write a hit song. And they write this song and they go out and play it. And you know what? It's not all that popular. And they, you know what? They feel bad about it, but they say, you know what? I'll write a new one. That's a totally different world than the engineer lives in. And so the sensors are the ones that have some difficulty. Patrick, if I remember correct, you are an N. That's right. You are an INTJ, I believe. So you're an N. So look, sensors, it's very tough for them. So they are built for hesitation in the market. If you are a sensor, you need to understand this about yourself, and you need to understand that it's going to be a problem causing a lot of hesitation. We're going to get into how to fix that for sensors at the end of the podcast. The next letter I want to talk about is the last letter. It's either a P, perceptive, or J, a judger. I'm a P, Patrick, you are a judger, and this is where Patrick sees the world more in black and white. I see it in more in shades of gray. So I'm much less likely to think as a losing trade as a failure because it's a shade of gray. It's not the worst trade I've ever made. Yeah, it was a bad trade, but it wasn't the worst one I ever made. J's, they don't see shades of gray. The losses are losses, and they're all losses and terrible. Patrick, you're a J. What can you add to this?
Well, I was just going to ask, don't you think that would work in my favor? Because if things just are what they are, then there's no reason to hesitate. We should just go forward. And, because also, I see my system and I see the results. I'm like, well, those are the results I should somewhat expect going forward. It seems like I would almost have an easier time with it as opposed to a harder time.
There's no doubt that J's are much, much more likely to follow a system. A P, someone who's like shades of gray, it's going to be tough for them to follow a system for sure. Look, every single personality trait has strengths and weaknesses, and this just illustrates those. A judger is way more likely to be a systematic trader. That's a great thing for it. But the problem is they are going to be more likely to hesitate because of this binary nature in their mind, good or bad. And if they think it might be bad, there's going to be some hesitation. You don't really get that from the P's.
Okay, so I understand. At first I thought because you guys see so many different colors, you think, well, this could go so many different ways, and that would lead to indecision. So what you are saying, though, is, kind of explain it one more time?
Well, it really comes down to uncertainty. So if you take these personality tests, if you are a J, let me tell you something about yourself. And Patrick, you're going to be the test here. J's really don't like modern art. Patrick, you a big fan of modern art?
Not at all.
Why is that?
Doesn't speak to me. It seems lazy. This kind of goes back to my rant when I really started speaking out against the first version of NFTs, just the profile pictures. I thought they were all money grabs. I thought the art was terrible and people were being gaslighted into thinking it was good. I'm like, this just doesn't do anything. This is like duct taping a banana peel to the wall and somebody paying a bunch of money for it. It's absurd. I admit I don't have an eye for art, but at least I'm not getting duped by this thing they call modern art. So yeah, that is so true. I just went on a rant about it.
Let me ask you the next question. What kind of art do you like? Like when you're out and you look at something and you see, that's actually pretty good art. What kind of art is it?
It's weird because if you don't have an eye for art, you just really don't have it. I wish I did. I wish I had that type of color into my life. But I would almost say that I like city skylines, and I can't explain why that would be. I've always been kind of drawn to that. More of kind of the man-made, I guess it's all man-made, but, more of that kind of collective project and that collective completion, I guess, and just how that fits into the vibe of an actual city. I guess that's where my soul lies, more in that type of aesthetic.
I was going to guess that your favorite type of art is photography.
I guess I like it better than modern art. Right, but
I'll agree with that.
Yeah, I don't know.
All right, look, it's just how our brains are wired. So the reason I'm going down this rabbit hole is that modern art doesn't make any sense. Look, I'll agree with it. I'll agree that I like modern art. I like trying to figure out what did this absolutely insane person, what were they thinking when they made this absolute disaster of art that somehow is now hanging up in the Met in New York? That to me is so interesting. But to someone like you, Patrick, it's so unfamiliar. You don't even understand. Like you don't understand why it would be hanging in the Met. You don't understand what is even the purpose of it, and you're not going to waste any time at that. And really what it comes down to is, for judgers, unfamiliarity and uncertainty is very uncomfortable because, again, you live in this binary world of black and white. In the world of trading, when you take a binary view into each trade, if you don't think that you're making a great trade, you won't make the trade. Even though, hey, the setup's pretty good, you're going to say, if it's not black and white, if that is not the best setup to have. I'm not going to take it on some of the trades that you should have taken. That's where you're going to get that hesitation from being a J.
And have you ever done this before the trade? Like everything speaks to you, like everything is giving you a signal to go, right? And you're going to take the trade, but I'm just not going to take the trade right now. I'm going to go do something else real quick, and then I'll come back to this, which is total procrastination, bullshit, nonsense, right? And then what happens? You go and check back on that currency pair, and it's already gone in your favor 10, 15, 20 pips. And then you FOMO into it just so you don't miss out on something that was giving you an obvious signal. And now the math that was in your favor isn't really in your favor anymore. Has this ever happened to you, Rob? And traders, let us know down in the comments section if you're on YouTube if anything like this has happened, because this has happened to me more times than I care to admit.
Well, Patrick, we're talking a lot about personality styles, and no, this doesn't happen to me. I have a saying in life. My saying in life is ready, fire, aim. And people say, wait, Rob, you got that wrong. It's ready, aim, fire. No, my life is ready, fire, aim. I take action. So again, my problem is I'm not hesitant enough sometimes. I've got the other problem, and maybe we need to do a whole podcast on that one. But no, I just don't have this issue. I'm not built that way.
Yeah, it's funny too, because I'm also an action taker compared to most people, but more on the things that take a bit more thought and a bit more long term. When it comes to being right there in the moment and having that pressure on you, like I said, I do it a lot less now, but I'm 13 years in. This is something that really plagued me before, but this conversation you and I are having is bringing a lot of this back. So I can certainly come up with examples. And again, like I always say on this podcast, you have to identify these things first. And this is something I don't think we touched on in under trading. So I wanted to bring this example up. And I have another example I'm going to save for a little bit later. I'm kind of waiting for you to set this one up, Rob. But I'll stop talking for a minute and kind of let you transition us into this next section so I can kind of put my examples where they're a bit more appropriate.
Great. So you actually said the words before the trade. And so let's really break down where hesitation happens. Before the trade is, again, my guess is if you hesitate before the trade, it is, again, those two things. Either the uncertainty of the trade is driving you crazy. And again, I know that some trades we feel more certain of, and some trades we feel less certain. That's ridiculous. One of my favorite things about trading for as long as I have no expectation of any of the trades I make to do anything other than I don't know what the hell is going to happen. That is my expectation now on every single trade. But when you are more certain about others and less certain about others, that's really where the, again, hesitation comes before the trade. Or it's from pain, and it's likely because you've felt recent pain over the last 1, 2, 3, 4, 5 trades that you've taken. That pain is causing that hesitation. So before the trade, it's most likely going to be for that pain. Next, let's take the next step in during the trade. You got into the trade. You made the trade. The trade is either going for you or against you. And you have to take action. At some point, you have to take to action. But you're frozen. This is during the trade. Patrick, do you have any experiences with this?
Well, kind of set us up a little bit more here. When you say during the trade, so you've already entered the trade, and now you're over to the money management portion of it. So what are some of the things that you think can trip people up during this time? Because I think my example is a bit more specific, and that's why I'm holding back on it for a second.
I see this all the time, and I have a word for it. It's called stuck. Sometimes people get stuck in a position, and this is what happens. They make the trade. They put the trade together. They're using their prefrontal cortex. They're putting their trade together. They get into the trade, and then they say something like, okay, I'm into, dollar yen here at 150. And if it goes below 149, I'm out. But again, maybe they don't have a stop in, or maybe whatever. And then the currency goes below 149 and that they didn't get out. At that point, that person is stuck. They already had this plan built out in their head. I'm going to get in because this thing's going to rip up to 155. And if it goes down to 149, I'll get out. And then they don't get out at 149. At this point, their brain literally has no idea what to do. And when people have no idea what to do, they don't act. They hesitate. That is the biggest one. And I am so paranoid of getting stuck in trades because I used to get stuck in trades. Oh my gosh, I used to get stuck in trades. I am so serious about never getting stuck in a trade again where like I'm waiting for this thing to come back for 2 weeks, 3 weeks, 5 months. I'm waiting for this thing to come back because I got stuck in it because I couldn't take my loss initially. I am so hyperfixated on not getting stuck in my trades anymore. I want to take losses. I want to take them early because I can take that capital somewhere else into a better place. That trade was already proven that it sucked because it lost. Let me put it into something that's going to make me money. This is the biggest one I see during the trade is that people get stuck. What they thought was going to happen didn't. And so their brain has no idea what to do. And every so often, I've got to call up one of my traders and be like, hey, look, you're stuck. I get it. Trust me. I get it. I'm going to take you out of this one for you because I fully understand you can't get out of it for yourself. And they say, no. And I said, look, let me take you out of it. You sit on it for a day or two. If you want to get back in it, call me. Patrick, how many times do you think they call me back and say they want to get in it 2 days later?
Yeah, they probably never do.
No, because the emotions are gone and now they realize that, oh, that's a shitty position. I don't want to get back in it. I'm going to do something else. Again, hesitation, getting stuck in the trade, that's a big one. What's your story, Patrick?
So I'm thinking, and we spoke about this a couple episodes ago, when you just got done with a trade that ran a lot in your favor and gave you a big win, or you're just in an environment where you're seeing a lot of big runs happening. I think people a lot of times will see this and get a bit greedy. And so this is kind of hesitation, not being scared, but actually working the other way. Now you're hesitant to take profit where your system tells you to take profit. So either you just don't enter it in at all and you think I'm just going to let this thing run and then decide for myself and use my brain to pick the time where I'm going to take profit, which is extremely dumb, or you put your first take profit in, but you all of a sudden become a lot more open to moving it depending on how fast price is moving itself. This is something I fell into when I was a lot younger, but this is something I think it's almost FOMO, but it's hesitation because price is getting to your first take profit, but you kind of don't want to take profit. You don't want that take profit to get hit. You don't want to get that win because you think you can win more. And I see this a lot when the VIX goes up or when the dollar EVZ goes up, whatever your volatility metrics are. And all of a sudden you're in an environment where people are pocketing these huge wins and they're talking about it. And you want to be a part of this too, but your discipline tells you to cut yourself off and in a sense cannibalize these big wins. This is where I see a different type of hesitation come into play. Does that make sense at all?
Absolutely. And really, you're pointing out anything that makes you deviate from your system is wrong. And the hesitation to follow your system is wrong.
But enough of that, I guess, for now, because I'm looking at something on the outline here, Rob, that I'm really interested in hearing about because I never thought of this, and I don't even know where you're going with this. But we've talked about before the trade. We've talked about things that happen during the trade. I kind of want to move on to something else, though, not really moving too far ahead, but I'm looking at our outline, Rob, and we've spoken about before the trade and during the trade. You have things that happen from a hesitation standpoint that happen after the trade. How does this work?
All right. So let's talk about after the trade is all done. You got in, you got out, you had this result. And here's the thing. You also watched what happened after the trade. So you got in at 120, you got out at 121, you're patting yourself on the back, and after the trade runs to 125. How's that going to make you feel, Patrick?
I feel nothing because I'm dead inside, but I know what you're talking about. I'm just, yeah, you do have a bit of regret, but we've already kind of touched on that. How does this tie into hesitation, though?
Look, after the trade is where a lot of the hesitation for the next trade comes in. So if you felt pain because the trade is now over, you're going to take that baggage into the next trade. In the first couple episodes of this podcast, we talked about removing the garbage and going through a process, meditation, going for a walk, whatever it is to break that stimulus from the past trade, because these are the things that cause hesitation in the next trade. So one of the things I recommend after the trade is to don't watch that trade anymore. Don't even look and see what possibly happened. I know it's going to be tough because you're watching the markets, but don't look at that trade. It is not going to do you any good once you actually are out of it.
Yeah, your trade is going to knock you out of a lot of really, really big moves, and that's just part of trading. It's foolish to sit there and think that you are going to catch them all, or even catch most of them. That's just not how it works. So that's all I can really say to that. So it is time for the solutions portion of the podcast, Rob. And I don't have too many solutions here that I haven't already talked about in the past, and you seem to have a few. So let's go ahead and kick this portion off.
Thank you. Let's talk about hesitation. Again, we have a hesitation before the trade. I have a hard time getting in. And again, you've talked about this time where you were watching the chart came in, it was giving you the signal, and you said, you know what? Let me go do this first. I'll come back and do it later. The reason you found something else to do was because you had either the uncertainty was too much for you at that moment, or you'd felt some recent pain and you didn't want to feel that pain again. The best way to trade, if you're finding yourself with trading hesitation, you need to get what I call order assistance. And I'm going to call them automated orders. A stop order is an automated order. Now, almost everyone and their dog knows how a stop order works to get you out. But do you know that you can use a stop order to get in? This is the best way. If you are finding hesitation from getting in, and again, we're going to talk about getting out here in a second, but getting in, a stop limit order is going to be your new best friend. Now, a stop order says, if it gets to this point, I want you to make my trade. Now, every stop is a stop market unless you tell it it's a stop limit. So when it gets to the stop order, if it's a stop market, it will just get you in wherever. Now, that's dangerous on the entry because sometimes things can really take off. If you use a limit, a stop limit, when it gets to your stop, let's say your stop is at 110, if you put a limit at 110.10, that's 10 pips. It can only be filled between those 2 points. If it takes off and blows through it, you aren't filled. If you're finding yourself hesitating and not getting in when you should, put orders out there. And one of the things I would love, there's so many things I would love to do for my traders' trading systems. The first one we've talked about, I would love to remove their P&L, and I would love to remove their account balance. I would love to remove those. Here's another thing I would like to do. You must put in a trade 1 hour before it actually gets triggered. So think about this. You can put in an order right now, and the earliest it can get triggered is in 1 hour. Are you going to look at a trade totally different? What do you think, Patrick?
Well, you probably are, because any emotion that was going on an hour ago has probably subsided, like you had talked about in the past. That'd be my best guess.
Yeah, and the biggest thing is that you're saying, okay, I'm only going to get in if this thing happens. So you would have to set up this criteria of all these things that had to happen for you to get in. And when you understand all that in advance and put it out there in advance, you've already fought the battle. Does that make sense? And you fought the battle when the market isn't going crazy, things aren't going up and down, and your head's spinning. You're disassociating from today, where all the emotion is, and saying, hey, and an hour from now, if this thing's above 115, I want in. And then you put an order out there, you've already fought the battle. You've already won the hesitation. Now, we are very familiar with using automated orders to get us out of trades. So again, take profit orders, great. I love trailing stop orders. A trailing stop order, if you have a hard time staying in stocks as long as you should, or staying in currencies as long as you should, use a trailing stop. Use a trailing stop, or put a stop underneath the moving average, something like that. There's all these automated orders that can really help you get over your hesitation.
And so when it comes to actual entries, Your solution sounds like something that would work really well if you're a price action trader, which of course, I mean, that's what you know, that's what you guys do. But you and I were talking off air, Rob, about something that could actually assist indicator traders like myself and like the people who follow my system, which is really interesting. This is something that is on Interactive Brokers. You said that I didn't even know exists. Now I'm sitting there wondering if MT4 has it or if TradingView has it. Can you speak to that a little bit? Tell us what it is.
Absolutely. There is a rabbit hole of automated orders that you can go down. I know at Interactive Brokers, you can literally tie the entry of anything to anything else that you want. For example, I want to buy Euro US dollar when the MACD of the S&P 500 crosses. You can literally do that. You can literally use a time stop. I want to get in next Tuesday at 1:45 a.m. into this currency. You can use all these things. So if you're having a hard time with this hesitation and you say, hey, I'm an indicator trader, tie it to the indicator. Tie it to the indicator. Again, there's so many things you can do to make it to where it's not your decision. When it's your decision at the moment and you've got all the pain, you got all of the memories, you got all the uncertainty, that's really hard to get over. When you don't have all that and you're just picking points and picking things, the emotion is gone. I think this is the best way to get rid of hesitation, is to basically automate your order process. Your entries and exits should all be automated, in my opinion.
Now, traders, don't get this confused with automating your entire system and going from a discretionary trader into an automated trader 100%. We will have an episode on that. We've been kind of saving it. It's going to be a big episode. That is coming. But what Rob's talking about is to use some of the tools that are already inherent in your trading software to maybe help get rid of some of the hesitation because you've already kind of crossed that Rubicon by not entering the trade, but by saying, if this happens, then I will enter the trade. Now, the indicator one I've heard of before, but the actual time one I thought was even more interesting because we usually check in at the same time every day. So there might be a little something there. I wish we could expound on that a little more, but it's something you just have to go in and kind of play with and see what your platform gives you and see if you can do anything with it if hesitation is something you are still struggling with in your trading. Rob, do you have anything else to add before we wrap it up?
Look, just take the actual decision at the moment out of your hands. Tie it forward. Again, time, price, indicator. There's something you can figure out to get your order to where it's made where all the emotions are off. Now, the next thing I want to talk about is people that have the hesitation from uncertainty. If you just have this uncertainty, you're looking at a trade and you just keep hesitating because of uncertainty. The problem is you're looking at that trade as a singular trade with a binary result. We've talked about this in some of the early episodes about trading in blocks. Now, if you were trying to make every trade a good trade, every trade a winning trade, that's a lot of pressure. That's a binary result. So if you're looking at this one trade right here, right now, and you say, oh man, I really want to have a winner here, that brings with it so much emotion that is going to cause some hesitation. If you trade in blocks, okay, I'm going to make 10 trades and I'm just trying to make money on 6 out of the 10. All of a sudden, you're taking some of that away. Some of that pressure from this binary result. A singular trade is much tougher than looking at trading as a group of trades. So trade in blocks, that's a big one. And I love the feedback that we got from that episode, Patrick, where people said, boy, this is a game changer. This changes how I look at every single trade I make. That should absolutely be how you look at trading. It's who cares about this one? This one is meaningless. Don't you realize that in 6 months, you won't even remember that you were worried about it for a minute? Like, it'll be gone. Treat it like the way it really is. Don't make it the biggest thing in the world right now. Oh, this one trade I'm in is the biggest thing in the world. It's meaningless. And then the last one I want to go over before we end, and I'm going to reemphasize what I said. Don't get stuck. I used to get stuck in trades, and it caused me to just sit there and wait. And it's because what I thought was going to happen didn't happen, and I didn't really have a plan for what did happen, and I got stuck, meaning I couldn't take action, because everything I'd already planned went to hell, and now my brain literally wouldn't make it possible for me to exit. You need to work really hard to not get stuck. It's a tough thing. It's a very tough thing. Again, using stop orders, using trailing stops, using all these things is really going to help. Get rid of that. Just, you have to work hard. Don't get stuck. I promise you, that little loss that you could have taken, you'll make that back so quick. That's the attitude you have to have. You cannot get stuck in your capital. You got to take that loss, move on, make it back somewhere else. That's really all I've got. So use those orders to assist you, trade in blocks, and work really hard to never get to the point where you're stuck in a trade that didn't go your way and you don't have a plan for what to do now.
Yeah, and I'd said this before. I think that trading in blocks was a total game changer for a lot of people. I thought it was such a creative idea. I'd never seen anything like that before, and I love things that force you to see things differently, but in a very positive, constructive way.
Patrick, I'm going to get you to see modern art differently.
Challenge accepted, and you will die on that hill. But on that note, everybody, thank you for tuning in to episode 48 of the Trading Psychology Podcast. We will see you next week.
Bye, everybody.